A little bit of problems with the streaming software. I was trying to wait for the key, and I was like, oh, okay, came up now, so that's good. How's everybody doing? Only got a few on the stream right now. This will be recorded if you want to watch it later. Obviously, if you're watching it later now, you would be later in the future anyway. I don't know what I'm talking about. All right, so I just wanted to go over some of the trades I did from this week. Also looking at possible trades for next week, which we could do together live. I haven't done a ton of research on that yet. And then I wanted to look more into the deep in the money covered calls, where you could actually get a pretty decent premium. You're not going to get a lot of upside necessarily, because if the capital gains come up on it, it's not going to really matter since you're already in the money, but you can still get pretty decent returns. And I looked into this with DTEA, and we'll do that into more detail. Okay. So at any time, feel free to leave any questions on the stream, and I'll get to it pretty shortly. Just want to go over some of my initial trades first. Let's see if this one works. Okay, this week was actually a pretty slow week in the end. So for the week of 419 to 423, we were looking at only 3 positions. For the week, I'm essentially waiting out a lot of my other positions to see what will happen with them. So the first one we had was GTE. I did that one for covered call expiration that happened already. I had to go, unfortunately, 2 months out on it, because the stock price was only at 0.66, and I'm going for a strike of $1, so it's a pretty big jump from 0.66 to the dollar. And premium was $75. It was for 5 positions, so not the end of the world there, but definitely want more in premium for it. Delta's 0.19. That'll be a good thing if it ends up getting up to the dollar in 2 months. I'll definitely more than appreciate that. RKT was the only other one I did. RKT 422. So I did this on Thursday. Went out to 521, essentially still rolling it out and hoping that I might get back up to that strike price. I was starting at 24.39. You can see up here at 415, and then just still rolled it out again because it was at 21.93. Essentially hasn't moved much this week. So I went down to 24 at least instead of 24.39. Premium was $590, and then it actually had an update today, so I bought to close at 544. So a slight profit, $46, and then I actually decided to go out again, lower $1 more, and actually closer to 507. And then I did do this for a net debit because I've only made $324 in premium compared to the 590 to 544 that I had before. The delta, however, is closer to 0.5, so there's a good chance that it might get up to 23 in a few weeks. And let's look at the total return for RKT. I see January in RKT too. I'll definitely get to that point very shortly. Essentially, I did all of the math for RKT, and I've already obtained $158 in premium. That includes the net debit that I had. It was actually a little higher than that. And this is for 2 positions with 200 shares. Current strike price is 23. If I take my 158, divide by 2 for 200 shares, I could lower my cost basis by 79 cents, and then we'll be at 22.21. So RKT is very close to that currently, 22.15. So if I waited a few more weeks and then I get assigned to 23, pretty close to break even after all this. However, I did start at 24.39 and went down $2. So can't complain too much since it did go down quite a bit, and I did lower my cost basis $2 a share for 200 shares. Then the only other positions was it. Very slow week. TNA, by the way, I was considering buying to close it. It was at 410 30 or so on Thursday. Had a huge up day. Went up. Well, TNA does not help. Okay. Google doesn't know what TNA means. 5.4% gain in the day. Very big up day. At one point, someone actually sold a customer put at 320 instead of 409. So I did place another order for 320. I would have taken about a $90 gain in a week out of $85. It's a little over 1%. That's why I hit my percent goal. Unfortunately, I didn't get a sign at the 320. I almost did. It ended up being 325 to 330. So not the end of the world. I did set my initial buy to close at 1.5. That will take at least another week or two if the stock price stays where it is. So that's it for the trades for this week. Pretty slow week. I do have some more coming up. Palantir, very close to 2350. If I do get a sign, I'm considering maybe on Kesker put, or I might just use this for a different position at this point, because I do have 300 shares in PLTR in my wife's account. CCIV as well. Strike price at 26. There's a very good chance I'm just going to get a sign on this one, since it's at least $4 or $5 behind the money. I did get $684 in premium though. So I take 26 minus 684 divided by 2, 342. We'll be at 2258. So if CCIV could get close to 2258 in the next week, it's not the end of the world. We're going to have to wait a bit on that one to get back to it. Also for 430, I think that's about it. Date of expirations. Oh, GSX, yes. GSX I could actually buy to close right now for a pretty decent profit. I made 3 positions for 234. Strike price is 1750. This has one of the most implied volatilities of any stock right now. It's at 27. And again, I have the Kessler puts at 1750. So $10 almost in downside protection for a week. I'm just going to let this one ride because it's still about 32 to 35 cents per buy to closing it. Times 3 would be at $90. I want to get a bigger premium than half the premium. And I'm just going to let it ride. Hopefully I could keep the full 234 and see how it goes. I haven't done this yet. I want to see what our monthly, the way to do this on Google Sheets, to do equals sum, parentheses, and highlight what you want. I'm going to highlight all of the Aprils. These were Marches. Going to add these to Aprils. I'll be honest with you guys, it's not a great month compared to the other months. Bound to happen at times. $66 for the month, unfortunately. This does include RKT. Let's assume I get a sign by it. I would be putting buy to close 0, premium 324, the way that I do my accounting. And then CCIV is the same idea. CCIV, I could theoretically say that I bought to close at 0 because I'm assigned at 26, get 1160 in premium here. So it's not quite the same gain because obviously CCIV is not at 26 and RKT is not at 23, but this would show as 1160 plus 324 gain plus the 66. Then we're theoretically looking really good because we're at about 1500 for the month. However, those shares are not where they need to be. The way I do my accounting is, let me get back to screen here. The way I do my accounting on this is a little dubious. If I start the position and then it ends up expiring in the same month, I'm going to count that as a net gain or loss depending on what happens. If I make a position that happens to just expire, I'm counting all of the premium as a gain unless I sell the shares. So CCIV 26, let's say I get a sign at 26 and then this current price is 21. That's a $5 share price loss or $500 per position. However, if I didn't sell the shares, and let's say I sell covered calls on CCIV, I'm not counting that $500 as a loss because it hasn't actually come in my brokerage yet. Okay, so there might be times where I do sell my position, like CCIV cost basis 22 and change. If it ends up getting to 23, I might just sell it, and then that initial sale will look like a big loss because I went from 26 to 23. Any other advice on how to actually manage that, please let me know in the chat. I know there's definitely ways you can account it, and I'm not trying to do anything subtle here. There are some that look a lot better than it actually is. And right now it looks worse than it actually is because I keep rolling out my CCIVs and RKTs. Jan said I did well with RKT and PLTR this week, but now we're selling puts again. Unfortunately, yep, sold a Mara put position. Okay, Mara's been very good to me in the past. Hopefully it is for you too. Control F, you can find whatever you need. Control F Mara. I made a $32 profit here. Another 32. Only lost 16 there. Another 32. 40. 15. 3. Because I need to buy another position there. 74. 64. So pretty good in general with Mara. It seems like I always get very lucky because I was getting out of these positions pretty much immediately after I started them. Waiting 5% down day, sell the cash secured put, shoots back up. Just good luck on that. I don't know if it'll always come that way, but never know. Can't hurt. PLTR, the IVs are starting to go down a bit, I think. People are knowing a little bit more about the company, so that's what might make the premiums lower than they were in the past. Current IV 55.8. It is lower than its HV historical volatility. That's why the premiums are lower. And it's why I did sell a at the money, pretty much at the money cash secured put on it. Let's go all the way to 19. PLTR is one of my most frequent positions here. Yeah, I did very close in the money. Oh, what I did was my cost basis for this challenge was around $23.50, so I ended up just selling the covered call at that price, and then $62 premium. Okay, as questions come up in the chat, I'll feel free to answer them. Don't see anything else right now, so I want to go over a bit on selling deep in the money cash secured. I'm sorry, covered calls, not cash secured puts. We'll also take a look at the weekly scanner. We could do that later. So this is pretty much the opposite of selling a cash secured put. What you're going to do is sell a covered call that's very deep in the money. And I'm going to look at high IV positions where you could still try to get that 1% a week. That is what I'm trying to get in my challenge, 1% a week or 4% a month, and then try to manage down to 2% a week if possible. So I was looking at DTEA. Here is the option chain for DTEA. The current share price is $3.30. On the call side right here, you could see the 2.5 strike price, bid is 0.9, ask is 1.05. I'm going to look at the math at 0.9 for all these, okay? Notice for the put side, which I do currently have 6 of these, the bid is 0.1, the ask is 0.5. I sold 8 of them, I think, at around 18. So still a little bit different there. Hello from Popeyes. Popeyes, what's the stock price symbol for that one? Forgot the name of it. Popeyes stock. They own a few things. AFCE. I'll take a look at those later. Anyway, let's look at this deep into money. This is DTA. They are another food company. They do matcha tea and whatnot. So buying 100 shares, and let's say you sell a covered call. So used to saying cash secured puts, but it's really a covered call for 521 at 2.5. Again, the share price is 3.3. So we're purposely selling a covered call lower than what the current price is. Okay, and let's look at the math on the bid price, 0.9. You might be able to get a little more. The last is 0.99, but with the math, let's assume worst case scenario right at the bid price. So buy 100 shares, sell covered call 521 at 2.5. The money you have to put up, you would be buying 100 shares at $3.30, and that would be a net loss of $330 from your account. Then if you sell your covered call at 2.5 for 0.9, you're going to be receiving $90 as a net credit into your brokerage. You can do whatever you want with that. but we're going to say it's plus 90 for the accounting. For the net cost, the 90 you brought in minus the 330 you took out, we're looking at a negative $240 cost. So it is a net debit on this, but it's very similar to a cash secured put, where let's say I want to do a cash secured put at 2.5, I'm going to have to put up $250 in my brokerage. So that is a new thing that I actually just realized. Your net cost could possibly be lower at the beginning of this position. Now let's say you wait a few weeks. When you can, try to buy to close. Let's sell 100 shares for a net profit of, let's say, $250. That would be the goal. So if you could get out of the position, bringing in $250, and there's a few ways you could do that, which we'll go over. Cost you $240, bring in $250, you'd be at a net gain of $10. And it could be only in a few weeks. And obviously you could use these numbers based on the funds you have. This is for a pretty relatively small position. You do make $10 when called. Yes, based on these numbers. Here's a few things that could happen. Let's say the stock is at $3 and the option price happens to be 0.5. This will happen a little in the future, closer to expiration. Let's say you actually end up buying to close it at 0.5. Your buy to close would be negative $50 because you had to buy the option back. But then you own 100 shares at 3. Let's say you sell the shares, you would get $300 back into your brokerage. 300 minus the 50 is $250 in net gain. So your net profit would be $250 minus the $240, or a $10 net gain in this transaction. $10 divided by the $240 you put up. Definitely want some clarification on that. I think it's $240 because you did receive the $90 in that initial covered call. It could be $250 here too. You get a 4.1% return, and this could happen possibly around 521, maybe even earlier than that, depending on what happens to the implied volatility, depends on the theta decay and all those other factors. Let's say the stock tanks and it goes down to 2.5, but then you get a little lucky and it stays at 2.5 all the way till 521 at expiration. Then your covered call expire worthless. Let's assume it doesn't get assigned. You still have 100 shares at $2.50. You sell those, you get $250. You'd have the exact same profit as above. So you could get a 4.1% return by 521 on this. Okay. A few of the issues I've noticed with this, it's looking more and more that it might be just extra work compared to just simply selling a cash secured put at 2.5. Definitely like to hear other opinions on this if you've ever do this before, but why don't you just sell the cash secured put at 2.5? You need to track the stock and track the option price and pretty much do a little bit more math to see is it even worth it or not to get rid of the position for a net profit, unless someone else out there knows of a different way to see. I know you do a buy right to start the position, so it's all one transaction. I'm not sure if certain brokerages let you do a whole separate transaction from this as well. Now you could lose money on this, obviously. If the stock goes below 2.5, let's say it goes to 2.4, in this case, your covered call will expire worthless because you sold the covered call at 2.5, but you own 100 shares, still be at 240, you're still profitable very closely. It'll be almost not even, right? After transaction fees. I think I initially made these numbers when the share price was not $3.30 anymore. So yeah, you could be profitable up to 2.39 or 2.41. It's a long day. If you're at 2.41, then you're at $241. You'd still be up $1. Don't spend that all at once. If the stock goes below your net cost, again, these numbers are different from before. If it goes below 240, then you are at a loss because the covered call premium would not take place of the initial share price from the 330 to 0. Here's some links on selling deep into money covered calls. I'm not going to go through all that now for time reasons. Let me change my settings. We're going to go to the display of Thinkorswim here. And let's look what's going on for the week. And this is at 423, so 426, week of 426. We're going to look at the weeklies first. Right now there are 55 total positions that are $20 or less in share price, between 1 to 3% return on your risk for the week, 3 to 7 days here, and at least 2% out of the money, all the way up to 40% out of the money, although a lot of these are probably not 40%. Few of them to consider for Monday. Kodak's always been around. It's always a play here. So Kodak at next week for 7. I'm going to go to stockoptionschannel.com. Kodak does not want to give up. The premiums stay good. Cannot spell. KDK. So Kodak 748. You could sell a Cascure put for 7. Initially it says 0.57%, but the screener here is saying 10. It's going with the bid ask high, and the last was 10. That's why it's a lot lower. So if you could happen to get 10 out of this, it's probably worth doing. The bid is 4, the ask is 11, the last is 10. So if you're able to get 10 out of 7, then you're over 1%, 1.4%. If you're only getting 4 out of 7, then you're at 0.57% for the week. And the delta is pretty low. I don't like it as much. FSR. FSR, Fisker, oh, they're the electric vehicle company. Already on my wit's end with CCIV, so let's throw another one in the mix. It's for 12. The 12 is paying 1% at the bid price. Right now the stock's at 14. The delta is 0.12. There's a lot of volume, a lot of open interest. This could be a good play. I personally won't do it because I have CCIV. I don't want to be too over leveraged into the electric vehicle market, but it could be a good position for those of you that don't have any IVs right now. Pretty decent downside protection from 14 to 12 in a week. This is not a bad position. I'd possibly recommend this one. So get a few others. COTY, always sticking around. We traded it before, 9.91. If you go to the 9.5, does pay the 1%. It's a little bit close of a cushion, only 4%. The delta is 0.34, a little risky on my end, I think. Nicola. Just pick every electric vehicle company that ever exists. 11.54. It's probably going to go bankrupt at one point because they lie to shareholders. Don't quote me on that one because I don't want to get sued by them. That's probably only the way they'll make money anyway. All right, 11.54. If you go down to 10, decent downside protection, 1.2%, delta 0.2. Okay, if you want an EV, go Nicola or Fisher. A few others to look at. BB? That's not Bed Bath & Beyond, right? But BlackBerry? They were making huge pushes in the past with The Wall Streeters, BB 8.5. It's at 8.8, pretty close. If you go to 8.5, you're getting 1.53%, and the delta's pretty low. All right, might have to change the screener for the deltas. The delta here says negative 0.3, so sometimes you see different things based on the possible screeners and other areas. HAL, Halliburton. Been hearing them a bit on the news from the options. Halliburton's 1906. Could go to 1850, pretty much 1%. Pretty close, 0.25. Not sure what the delta on HAL is. Doesn't say here's 0.1. For this one, the delta would be 0.16 about. This is not a bad position either. Oh, it's less. Yeah, some of these positions are looking pretty risky. The IVs might be getting lower. Let's check the VIX on that. Flex? Not sure what they do. Might have to go beyond the 20 here. Flex at 18. You go right to 18. Again, not much of a cushion there at all. But you do get your 1% a week. Now we're going to raise the stock price to say 40. You definitely get more here. Bed Bath & Beyond, those soaps constantly paying 1%. I think you make so much money on soap. All right, BBBY is 26.52. So 25, decent downside protection. Delta's 0.32. Not a bad play. You consider BBBY at 25. And of course CCIV right in my throat. These electric vehicles are all over the place. AAOI. Never heard of these guys, but there is one paying 1%. Maybe in the bid ask at 8. You could try to do a last at 15, or even 10 will pay it. I don't know anything about them though, but another possibility. All right, we'll look at questions and comments in the chat. Jan says, just buy a call at half of the current price. Even going out 2 years, almost no extrinsic time premium. Yes, for most positions, especially if there's a lot of IV, it might not be quite as much. Yeah, buying a call will lower your amount that you have to put up into the option. However, I haven't been considering buying calls just because it might be, it could easily move pretty quickly. That doesn't necessarily mean it's a bad thing. You could easily get to a pace where stock goes down a lot. You could have to sell your call again. I'm just not a fan of buying calls in the beginning. If there's any other questions in the chat, let me know. And I'll feel free to answer any. I know it's a little bit of a delay here, but pretty slow week. Just wanted to check in with you guys. Definitely appreciate everyone watching and supporting the channel. Got a busy week ahead of me with tennis. Got regional tennis. Got a meeting Sunday night, practice Saturday morning, and regional tournament Monday and Tuesday. So I want to check in now with any of you viewers. So I'll stick around a few more minutes, and if any other comments come up, feel free to let me know. There is a little delay, it looks like, from when I talk to when I'm seeing comments come up in the past. A few other things I'm thinking of while I'm waiting for chat. A few other things I'm considering is getting out of CCIV completely, taking the loss and just moving on. But I hate to take an actual loss here. The other ones are GNUS took a big hit because it went from 2.6 to 1.6. like nothing. And it's been selling some covered calls about a month out. At least I'm getting about 6% a month on the covered call side. I'm going to have to wait that one out a bit. All right, got a few comments. Best on low dividend stocks for buying calls. Yeah, it could be fine because the dividends will probably not change the share price as much as these high IVs that I mentioned, and just cushions it out a bit more. CHPT, let's take a look at that one. CHPT. Got it right. Share price, stock price, charge point. Okay. Oh, they're doing the charging stations. Yes. There's somewhere to Blink, I think, right? BLNK. Seems like they're both doing very similar things. Sure, it's a side play on the EV market. I have traded Blink before, and Blink is at 37.59. Charge point's at 24.38, so less money you have to put up. Let's look at what the option prices are. Never done charge point before, so I might as well look into it. Good recommendation. 24.38. If you go a week out, you have to go up to 22. You still get almost 10% downside. You get 1.3%, 30 over 22. Low IV, 0.17. Yeah, good choice. So this on the year. Thank you for that recommendation. I think I would consider the 22 on that. Even the 2150 is paying close to 1%. And your IV goes to, sorry, your delta goes to 0.12 instead of 0.17. So yes, I like the 2150 or the 22 for the week. If you're looking out towards the month, if you go to May 21st, you go to 1750 and get 1%. We want more than that. Let's say you want around 4%. You go to the 21, make $91. 91 over 21. You're going to have 4.3%, and the delta is 0.22. That might be another good choice. So weekly was around 24. Monthly, you go down to the 21. No, weekly, don't go to 24. It's just too close. Just did the wheel in the past 2 weeks, made almost $100. Good job on that. So assume you started in the cash secured put side, Citizen of the Year. You got a sign and then went back to the covered call side. And it looks like you're doing weeklies if this happened in the last 2 weeks. So not bad. Do you go to 1% a week about? Pretty much what I recommend, or close to that. At least in the beginning, cash secured put side. Yeah, I think CHPT could be one that I do. Does delta correspond to likelihood of expiring in the money? Delta has to do with the odds of the stock going to the strike price. Essentially, if the stock goes up $1, the delta, if it was positive, let's say it's positive 0.3, would change the option premium 30 cents. So if you own 100 shares, your delta is exactly 1. So I think it is in the money. It's not probability of profit. It's probability of essentially expiring worthless. So right in the money. That doesn't necessarily mean it will be profitable. The probability of profit will be a little bit higher than these deltas because you might be able to still get a sign, but your premium might have been higher than the loss of the share price. And so this in the year, yep, exactly good on the weeklies. I like weeklies in general. If you have the time for them, definitely go through, just being able to manage your positions. If you get used to the timing of it and you get pretty consistent on the first, say 5 to 10 holdings or so, you could do it in maybe 30 minutes to an hour, especially if you know the exact prices that you have. TD Ameritrade lists likelihood of expiring at the money. Yep, okay. I guess Thinkorswim does that too. I look at the delta just to see what the odds are of actually having to get exercise on the option. Not the same as probability of profit. It's usually pretty close, especially if you're working on low IV positions. But if it's a high IV position, your deltas and your probability of profits could be pretty different, I think, if the stock changes quite a bit. Any other questions, thoughts, comments? Do you see 7 on the chat? So again, appreciate all of you guys joining in. Feel free to ask any questions you might have on any positions you might own. If you're in a situation you want maybe a little bit of fine tuning on, feel free to stick around a few more minutes if you'd like. Do have a long day to play in tennis tomorrow at 6:45 in the morning. The sun's not even up yet. We don't have lights. We play in the dark until the sun comes up at around 7. We are jogging first. Anyone else out there? Next time I'll give a little bit more heads up on when I'm going to do these, because I was going to try to do it on Sunday and then I realized I have my district tennis meeting, so I'll be an hour away. Can't quite do the meeting then. Alright, so I guess I'm going to just end it here. I don't see any more chats. Feel free to leave a comment on any of my other videos at any time, and I definitely read everything I see and I will respond to it. Could possibly make a new video on it as well. And thanks for tuning in. Thanks for supporting the channel. And let others know if you're interested in more live streams like this. I'll be free. Feel free to do it, all right? Have a good day, everybody.